transmission between humans.
So
you have a fever and cough or sore throat, stay home.
I'd say 95% chance this manufacturer came out of a laboratory.
About. Our viewpoint is very simple. I think we're, like what Jason said, we're still not out of the woods. We don't know if this is over or we have seen the worst. But what we do know is that we've seen the initial panic selling and the irrational selling that has happened, and you've probably seen a short-term bottom. So it's two things. It's the dollar and the bonds that we're watching closely. If you take a look at the Philippines and what happened over the last 4 weeks in the Philippines, you pretty much seen a 50% sell-off all the way to the low of 4,000. Altogether, you've seen irrational selling pick apart as you see ADX go way above 50 in the short term. So our parameters are very simple. Focus on the big caps. So if you ask me, there are only like 3 or 4 stocks that are worth buying. So obviously you have your AC, SM, BPI, BDO. Okay. You can include URC. Those are the companies that have liquidity, especially in the short term. The reality of the situation is that we're trying to wait for volatility to start dying down. And these next 4 weeks are incredibly important to us.
In terms of the markets, what I'm looking at right now is oil. Look at that. I think it's threatening to break below $20 a barrel. So this is a 17-year low. And I think that this is going to create a lot of problems, especially for US shale oil companies and a lot of economies like Saudi Arabia, the Middle East, and a lot of countries that are dependent on commodities. And another thing that's happening is if you look at Trump, he wants to reopen everything by April, Easter. I think this is wildly optimistic, and I think it's wrong. Because like if you look at what an early restart of the economy is going to cost, it's going to cost, according to some calculations, 2 million Americans are going to die. I truly believe that, like what Bill Gates said, I think the US is too late in trying to form a middle ground in terms of controlling this virus and restarting at the same time. That's impossible at this point. I think that what they really have to do is like what happened to Hubei, complete shutdown for 6-10 weeks. Okay? So if that happens, then obviously the effects on the economy is going to get a lot worse.
There's basically, we're trying to figure out the general shape of this sell-off, whether it's going to next one or a rising wedge. But what I'm sure of is because of the volatility on both ends, trading and short, it will be so 60-70% you should be scalping. There will be overnight landmines. So you should be light overnight. But essentially, because of the difficult market, because of the volatility, the shorter your list is, so you can trade with the focus list.
We are going to talk about our trading approach to the COVID-19 epidemic. We're also going to touch on our outlook moving forward and some issues that we are looking at. So when the virus had spread globally back in Feb, there was a very palpable shift in market sentiment across the globe. I'm sure you guys could agree. And it was unclear where markets would be 2 months from now, let alone 6 months from now. So our team, we had to regroup, and I'll walk you through some of the steps we did as part of our regroup. So as market participants, maybe we have an inclination, given our research, towards a specific case. But as we can see with even some of the trading experts that we follow, all of them are basically preparing for multiple scenarios. They know that they can't really rely on the case that they're expecting most likely to happen. And if the market does something that they don't expect, they are not going to be caught off guard. So this is something that we also had to adapt in our strategy. And as part of our scenario analysis, it was important that we were seeking perspectives outside of our own. So in particular, a point of view that doesn't necessarily agree with ours. Not only does it help us see our blind spots, we were also able to flesh out our ideas better when we were discussing with other people.
Right.
So this is crudely the framework that we based our preparations upon as a team. And so given the different market scenarios and given the different scenarios in the framework of the Moderan, how we approached preparing was we asked ourselves first, where will we find our multiple R trades? Meaning, where is risk reward the greatest? Where can we find that? And the portions of the market that we thought would be good to look at were, number one, which companies stayed afloat amidst the crisis, amidst this COVID-19. And number two, at the same time, which companies were merely collateral damage. So in the market, everything was sold off and there was a point of great irrationality, and people, especially bigger funds, they needed to liquidate for safety, to protect their capital, right, to reduce exposure.
Before I move on to our market expectations and the stocks that we're looking at, let me just give a little warning that these are our views. These picks came from our process, our framework, so execute at your own risk. Just make sure that you manage your risk. We think that as early as tonight, we will see a higher low in the market. If it fails, then at most an equal low in the next few days. Why is that? First and foremost, market breadth is better. Market breadth is just the percentage of gainers versus the total number of stocks in the market. So that's usually a sign of risk-taking. Now moving on to the Philippines. Again, in the Philippines, we're also not as bearish. Why is that? Number one, primarily because of GSIS and SSS providing strong support near the 5,000 level. And we've also seen corporate buybacks at its highest. I think in my 11 or 12 years in trading the Philippines, I've never seen corporate buybacks to be at the current level. Now for our last pick, it's AC Energy Philippines, soon to be AC Energy International. So that infusion by Ayala of the international business, that's not expected. That wasn't expected, and it was swapped or will be swapped at a premium of 2.97 pesos.
So I titled my presentation "What I Know and What I Don't." All right. So here I've summarized the things that I know and the things that I don't. And if you look closely, you might realize that there's slightly more things on the right than on the left. And so it's a personal balance. No, it might be different for you or me, depending on your strategy, depending on your condition. It's different for everybody. But the key is there has to be a balance. No? And the balance would be the ultimate, the ultimate strategy that you do, the ultimate exposure would be driven by probability. So the reason why I shared the first two slides is because I would like to encourage all of you guys to think in probabilities rather than certainties, right? What do I mean by this? I guess 2 points. First one, don't chase for the 100% trade, right? Don't wait for a trade to be 100% sure before you, or even close to that, 80%, 90%. Don't wait for it to happen because it's never going to happen, right? The only time we're 100% sure of the trade is after the trade is done.
Bargain basement, meaning they're bargain and they've fallen about 50% from the peak. They're lower risk because if you use Charles' method a while ago, generally they will survive this crisis. Their debt is low, they have cash, their market cap is huge. The problem is they were waiting for the turnaround to happen. So they may stay cheap for a while. Normally we do quick short trades for these stocks. They're very attractive long-term picks, so COL will have a good list of these stocks that they want, but they can stay cheap for the meantime while the crisis remains in place. All in all, for the left side of the chart, which I will show the right side in a bit, you can prioritize if you believe the recovery will be quick and the impact on the economy will be small. On the right side, the lower risk stocks, we call them stocks at a reasonable price. Reasonable because they have fallen the least during this crisis. So if you're a trader and you run relative strength screeners, they will be the first to come out. Okay, so I'll go to, since we prioritize the US, I'll go to some examples in the US that are our favorites today. One is what we call Livongo. It's a 3 billion, so it's a small company. And what they do is they do chronic disease management.
There are also sectors that continue to outperform the market despite the COVID crisis. So these are the more technicals, which is like data and AI, because as companies digitize their business, let's say like new sectors such as telehealth and e-commerce now need higher data capacity and analysis for their businesses. So there is a huge demand for data and AI. For our next one, this is AMD. It's a long-time favorite of ours already, and we still continue to like it. It's a semiconductor company which produces chips for PC, gaming, and data centers.
Okay, so the next one is AMD. So this was, if you notice, this is the time, so March na eh. So fairly recent, just I guess 2 weeks ago. So during this time, as a trader, I was defensive na. I was on the defensive mode. So honestly, nakakatakot talaga mag-enter. But if you listen to the last week's presentation, and I guess by now you're all familiar with the term na, the SARP or the SARP. So SARP are those safe assets at reasonable prices. So these are the companies that you want to accumulate during like market bottoms or market retest, because they are the stronger stocks, right? So the plan was just to swing trade it. Okay, so I was looking to enter the SARPs basically on any market bottoms or reset. So in this particular trade, I put my size here, I put my trade stop here, and I put my size here. So I was looking just to swing trade it, but when after 2 days it gave me 11% to 14% return, I just scalped it. Okay, so my expectation was just to sell on surges and to buy again on support. So I drew my expectation. So this is the more bearish one. This is the base case, right? But what actually happened was like this. Okay, so it just went up, straight up. And then this next example is Wilcon. So during the time that the market was rotating, Jollibee was the strongest consumer non-discretionary. So having seen the potential move of those stocks, I quickly rotated into Wilcon, which is also a consumer non-discretionary. Right? So, but size was just small, like 0.25 bar, and every chance na it surges, I was quick to sell to take profits.
Same as mRNA, I was prepared to actually buy the XBO given the hype of the COVID-19 vaccine. So this was one of the companies developing a vaccine, and I bought it at around 38 area. Then I sold everything near the 39 and 40 area. So the rigid expectations was there was that I was always planning to sell everything, not holding overnight, given the possibility that the market can actually gap down. And since there were a lot of issues going up each day, I can just rotate. So I was still looking for long alphas. It is important to have the community and mental preparation. In terms of community, it will help you address your blind spots. Kasi each tayo may kanya-kanyang biases, like ang dami nating nababasang bad news, etc. But if we just listen to the price action and open our minds to the different scenarios that the market has already priced in something, ang daming mga employment data na lumabas pero hindi nalaglag yung market. So that alone is a sign that probably the market has already discounted everything.
Next is dedicated execution versus purposeful execution. Purposeful means that I'm trying to find a trading setup. So I do this so that this is hopefully the outcome. When you say dedicated execution, this is the only thing I will trade. And if you don't trade that and you trade something else, you know you've done something wrong. Dedicated means this is the only thing I am doing. I'm not going to trade reversals and trend trading and intraday trading all at the same time. I'm going to pick, hey, I'm only going to trade momentum setups today, and that's it. Anything that's trend trading, that's it. Because what ends up happening is that you're trying to master every single trading format. I have one trader that I tell him, he comes up to me and he says, "Hey, I'm struggling because I'm not really good at anything." I go, "Exactly." But the problem is here that there's no problem here. The only thing here is that you know how to use every single tool. The thing here is that you don't pick which one you're good at. Every single tool you want to touch every single tool, but you're not good at all of them. You know how to use it, you know how it works, but you're not really good with any single one. Find out which tool you're good at and push and dedicate yourself to that one.
So for the US, I usually focus on 4 categories. So there's recent IPOs, and hot industry stocks or stocks with industry momentum, stocks with interesting narratives, and stocks with significant news recently, like acquisitions, spin-offs, or earnings beat. So today, I'm just going to focus on my favorite category. It's the hot industry or stocks with industry momentum. Usually, kasi in this category, you'll find a lot of stocks moving, and usually yung moves nila sustainable for a few months or a year. A lot of these stocks have been in a 8 to 10 year bear market already. So they're selling for less than liquidation value and significant discount to NAV. So with the land storage already full, the floating storage is the only game in town left. So as you saw in the news recently, like oil tankers just floating around the coast of California, and even like 2 months ago in the coast of China, there was already news about this. So what happened was, due to high demand for tanker storage, tanker rates have skyrocketed. Like since the start of March, it was around 30,000 per day to the end of April, around 300,000 per day.
So specifically, I want to talk about the Hong Kong biotech sector and the new opportunities that we see. You can see the peers for each stock, because Hong Kong is different in terms of how it moves by sector, because Hong Kong stocks, probably 80 to 90% it moves by sector. Like today, it was all biotech and all educational stocks. So the reason for that is Hong Kong is a retail-dominated market, and retail investors, they usually don't do much in terms of reading their fundamentals. They just pile into the hot sectors. Okay, so screening process is basically the same what I teach at the executive course. Sometimes we find it through price first, sometimes we find it through the news that we read. So we do a lot of both every day. But if you're trying to screen for new candidates through price, it's basically through price and volume still. So my style personally, I like a lot of the speculative companies. So I don't like those companies that are trending up but are just channeling.
I think Jason presented it a while ago that we're picking a lot of the parabolic that came in from all the different cases. So of course, our biggest concern is we have a dark cloud. Overall, we know that the main street are gonna get hit. The thing is that prices have rallied a lot, mainly because of expectation that these things are going to be resolved. Meaning because the action of the Fed, the action of the government in locking down the economy, basically is to flatten the curve. So going forward, I think that's one of the reasons why I don't really like to short the market, because there's going forward, we think that it's more positive news coming out rather than negative news. No? But I really believe that once all of this news comes out already, for example, all the good news comes out, and then we're trying to go back to normalization, right? When the new normal, of course, it's a new normal. Then you would see prices starts drifting, meaning it's gonna go sideways, and eventually it might have a lot of retests from to the previous low. But it's not going to be overnight that it's going to go back down there. Let's say they call it the B rally, and then, so I don't really I really don't believe that you want to be shorting the market, because those people who are shorting is mainly because they still think it's a downtrend, and then you're rallying to resistance. Yes, we're seeing resistance, but the thing is that there's a lot of new issues in the U.S. that are going new highs, right? I mean, if you have all these sectors that are going new highs, that means overall the market is still very healthy on the upside, not on the downside.